Hello, you're watching Proactive London. I'm joined in studio today by Praz Jayanandan and Mike Clements, fund managers for the VT Downing European Unconstrained Income Fund. Gents, thank you very much for coming in.
Hello.
So Mike, let's maybe start with you. Give us an overview of the fund.
So the VT Downing European Unconstrained Fund is quite a straightforward fund. It's a Europe ex-UK product, concentrated, so somewhere between 30 to 40 names. And it has the ability to go up and down the market cap spectrum, so it's an all-cap fund. But typically we have quite a large proportion of the fund exposed to small and mid-cap companies.
So why should investors be excited about Europe at the moment, Mike?
Well, notwithstanding politics, which is always tricky, I think there's a couple of things which we're quite excited about at the moment. First is just the valuation of Europe in a global context is pretty attractive. In fact, if you look at the valuation of the European market today, compared to, say, the US market, it's probably the cheapest it's been in about 15 years. And then within Europe, there's a lot of things going on below the surface which maybe clients aren't as aware of. And within Europe, actually, the cheapest part of the market is the small cap, which is probably the cheapest it's been this century.
Perhaps what parts of the European markets are of most interest now to you?
As Mike mentioned, small mid-cap is of huge interest to us, as it is as cheap as we've seen all century, as Mike just said. So we have been building up positions within that part of the portfolio. Another thing that we've noticed is the market has become increasingly concentrated. We've seen the Mag 7 in the US. Similar in Europe, we've seen a lot of concentration around the mega caps and in a few names in particular. But that leaves a huge tail within Europe of companies that have really, the market's really fallen out of love with a lot of these companies for no real reason. They've just not had that momentum. And actually we're seeing valuations for a lot of these companies, some of them quite contrarian, get to quite distressed levels for companies that are actually doing quite well. So there's a huge amount of opportunity. More tactically, Mike mentioned sort of political risk, elections in France. There's always a bit of volatility within Europe, and that throws up opportunities for stock pickers like ourselves.
And how are you set up to capture those opportunities, Mike? How do you go about identifying most interesting opportunities?
Yeah, it's a very interesting question. We basically look for two types of opportunity. The first is that classic contrarian play. And as Praz talks about, the volatility that you sometimes can get in the European market can throw up really interesting opportunities. So, for example, we're looking at the French market, given what's going on with the politics at the moment. And so that's the first thing, is these contrarian opportunities. The other thing we do, and actually what we spend most of our day doing, is essentially what we would call a value chain hunt. And this is the idea where you go up and down a particular industry's value chain from the very start to the very end of it. And what we try to do in our very detailed, long-term focused research is identify where the bottlenecks are in that value chain. And when we find those bottlenecks, we'll stop, we'll do the work, and potentially they can generate ideas for our portfolio.
Praz, can you give us an example of an interesting opportunity you have in the fund right now and how you identified it?
So we have a company called InPost in the fund. It's quite a large position. And it's a really interesting company. They run and operate automatic parcel machines, so parcel lockers. So if you walk past a train station, a supermarket, you'll often see these InPost parcel lockers, and you might walk past them and not really notice what they are. You might be an active user of them, but essentially what it's trying to do is make parcel delivery and parcel drop-off as easy as posting mail. So we all love parcels delivered to home, but actually it's not always the most convenient. You want to go to work, you might want to pick it up, drop it off on the way to work. And these machines really facilitate that. A really interesting business. It's been around in Poland for about 20 years. It now has 50% market share parcel deliveries in Poland, and is still growing its top line at about 20%. It's now moved to the UK and France, and it's rolling out that business model very fast. So it's pretty much, I think they've just launched their 7,000th machine in the UK. It's all about density. Very, very fast growing business. Mike mentioned contrarian. It probably doesn't sound very contrarian. But being a Polish business, its shares were really whacked when Russia invaded the Ukraine, really just off the back of its sort of Eastern European exposure. We were able to buy a very high quality business, very fast growing, at multiples that were very, very cheap at the time. And it stays in the fund because we continue to see that growth.
Mike, an example from you?
Yeah, maybe to pick up on that other example, which is this idea of value chain analysis. One of our other big holdings at the moment is a very interesting Danish company called Cadeler. Now, this is a company that's operating in the offshore wind industry. And as we all know, the world's moving away from fossil fuels. and continue to grow the sort of renewable business. And so there's a lot of wind farms being put up in the North Sea. When you analyse that industry, what you will find is actually the part of the industry that's most constrained is actually not the manufacture of the turbines or the monopiles, or even getting the labour to make some of the very technical components. The bottleneck actually is in the physical installation of the turbines in the North Sea. And to do that, you need some very sophisticated, very expensive ships, which sail out, will lift up on a very tall crane and put that turbine on top of the monopile. And when you analyse it, that's actually where the bottleneck is. And Cadeler is the world leader in that. And as offshore wind continues to accelerate, and in fact it accelerates from 2027, this is where we think the best returns are going to be found along that industry value chain.
So Mike, how should clients use your fund in their allocation?
Yeah, I mean, clients use us essentially as a stock picking fund, but our fund tends to look quite different to many other peers. For example, because we are an all cap portfolio, as opposed to most of our peers, a large cap portfolio, we tend to have a much more small and mid cap allocation, but also we have very limited overlap with many of the funds, typically 5 or 6%. So what many clients use us for is to add diversification to their overall portfolio and to introduce into their exposures ideas which are not that easy to find or they don't get from other sources.
Praz?
Absolutely. To what Mike says, I mean, sometimes we hear it described as adding a bit of that stock picking spice. Those sorts of ideas, they're quite hard to find. They can be very contrarian. We've done a lot of work, a lot of research to try and sort of sift out value traps and make sure these are really, really good value opportunities. So it's really trying to add something that clients can't find elsewhere.
A bit of stock picking spice. Gents, thank you so much for coming through and sharing all that.
Thank you so much.
That's Praz Jeyanandan and Mike Clements, fund managers of the VT Darning European Unconstrained Income Fund.